You get organized in life and you create systems to do things like go live every single morning. Welcome, David Blair, on Instagram, and you try to get organized, and then you're going to go live, and you have to go live at 8:30 Mountain every day. You have to go live at 8:30 Mountain. You have to be prepared, and right before, just as you're getting your system all set up, what happens? Your daughter comes in who's in grade 6, and she has a math test like right now, and she needs to better understand how to do long division. Do you know how to do long division? I mean, I do that stuff in my head as you do, I'm sure, but do you know how to explain it to someone in grade 6? And then you spill your coffee all over your keyboard, and you lose an iPod, like an AirPod for your ear. So I don't know. Hopefully the sound is good this morning. Where are we? We are live on Facebook, LinkedIn, YouTube, X, Instagram. I believe we are good to go. Welcome, everybody. February 12th, 2025, episode 330, Mornings with Scott, the best damn business show for medium and small businesses on the planet. Markets today are not good. Inflation up to 3%. That's the big news. So all the stocks are... the futures this morning, I haven't looked as I was logging in here, but they were cratering. They were cratering before markets were open because of the inflation at 3% in the U.S. And those of you that want to blame Trump, let's remember he's been in office 3 weeks. These are actually Biden's numbers, but inflation is sticky. It rebounds, and the expectations were 2.9%. And what I would suggest to all of you is chill. Do you really think that government data is accurate within 0.1%, 2.93, 2.93? Isn't that sort of a hit? We've had years of monthly and quarterly revisions to all government data. And so it seems to me we're pretty dead on with that. But the markets are freaking out. Tesla continues to get crushed. Canadian dollars down. Everything is down. Did you see the Elon Musk, Trump, and the little kid X, not the platform X, but Elon Musk's kid? I don't know, how old is he? Looks like he's maybe 3 or 4. They did a press conference yesterday. It was amazing. And it was about Doge, and Musk spoke a lot answering reporters' questions. He's been on the job 3 weeks. They've found what they think will add up to about $1 trillion in waste, fraud, and abuse. And as Trump explained it, he says, normally in these situations, you would think, wow, let's look at 100 items and we'll find one problem. He says, in this government, it's the other way around. He says, we look at 100 items and we find 99 problems and one thing that's legit. $1 trillion. Do you remember when $1 billion was a lot of money? I'm older than a lot of you. And when I was younger, I was like, oh my goodness, we could grow up and we could be millionaires. And then that was sort of like a monetary goal. And then somewhere along that, while you were becoming, or I was becoming a millionaire, other people became billionaires. And I go, wait, what? How did that happen? And now a million is like, nobody cares. We need to be hundreds of billions and trillions of dollars. It's amazing. I remember what billion used to add up to things. Also, that's cuts in waste, fraud, and abuse, as they call it. But what about government efficiencies? According to the Wall Street Journal, federal retirement systems by Elon Musk, head of Doge, highlights a bizarre inefficiency. So this comes down to the federal system for retirement paperwork. So they have, I don't know, millions of employees, and people want to retire all the time, obviously. And there's a system for this, which is 100% manual. Wall Street Journal says the federal retirement paperwork is stored in a limestone mine, processed manually. Musk explains in the Oval Office that retirements are limited by what? Are they limited by some sort of human resource goal? No, they are not. They are limited by the speed of the elevator shaft in the mine. Thanks for joining us on Instagram, Ashley. And thanks for letting me know that the sound is working. I've never done this before, but let's check this out. There is, if you're on the audio, you're not seeing this, but there's a picture of the mine site. So this is an old limestone mine. According to an X post from Doge, Federal employee retirements are processed using paper by hand in an old limestone mine in Pennsylvania. There's 700 plus, must set up to 1,000 employees that work 230 feet underground. There's some of the paperwork. 230 feet underground to process 10,000 applications per month, if you can believe that. And that's their capacity. And the limitation is the speed of the elevator shaft going the 230 feet, 23 stories down to this mine. And if the elevator breaks, no one can retire. That's the way it works. So there's a lot of inefficiencies. Apparently, I think, I don't have it in front of me, but Musk said that this this mine shaft was created in 1954, and no one has modernized the system since. That's the way we're rolling in the U.S. government. I'm sure it's the same in Canada. All right, let's get on it. Globe and Mail. The Ford CEO says tariffs would devastate U.S. auto industry and benefit international rivals. I know we don't want to talk about tariffs again. They're so boring. I have to tell you, Globe and Mail is a Canadian newspaper. Call it the Wall Street Journal of Canada. And when I read that Ford says that tariffs would devastate the U.S. auto industry, I assumed in my head that they were referring to Premier Ford, the Ford of Ontario, Ontario having the bulk of the auto industry, and having the city of Windsor, which is basically an extension of the city of Detroit. And so that's what I thought it was. But nope, this is actually the Ford Motor Company in the U.S. The real CEO says that U.S. tariffs on Canadian Mexico imports will devastate U.S. automaking and give a price advantage to overseas rivals. President Donald Trump has briefly paused his 25% tariffs on imports, although he's going to ding on March 12th steel and aluminum, he said. James Farley, the Ford CEO, speaking at an investors conference in New York on Tuesday, said the tariffs are creating cost and chaos. Yes, they are. We talked about this yesterday, that there's just chaos and volatility in business. And I gave you some tips on yesterday's show as a medium and small business leader executive, what to do about that, some strategies for how to handle that chaos. Let's be real honest, said the CEO. Long term, a 25% tariff across the Mexican and Canadian border would blow a hole in the U.S. industry that we have never seen. And it frankly, excuse me, I've lost my voice today. And it frankly gives free rein to South Korea and Japanese and European companies that are bringing 1.5 million to 2 million vehicles into the U.S. that wouldn't be subject to those Mexican and Canadian tariffs. It would be big windfalls for those companies ever, except that's not true, because the Trump administration will also tariff those vehicles coming in. The bottom line is cars are going to cost a lot more in the short term if all of this tariffing goes through. Is that a word? Can I say tariffing? That would be cool if that was a word, but it doesn't sound right coming out of my mouth. Sherry House, Ford's CFO, said about 90% of the company's steel and aluminum comes from the U.S., but the rest of it is imported and uses international metals and would be subject to the tariffs, and that will send costs up at Ford. For decades, Canada and the United States have had free trade, adding Mexico to the tariff-free pact in 1994. The agreement renegotiated by Trump in his term in his first term allowed the auto industry to become highly integrated and efficient. So the auto industry, I own an auto parts manufacturing company. It's just completely integrated in real time between Canada and the US. Mexico somewhat as well, but really Canada and the US have built an integrated supply chain. And, you just can't with a blunt instrument. Well, I mean, you can with a blunt instrument undo that integrated supply chain, but it's going to cause devastation on both sides of the border. And maybe that's what the administration wants to do to rebuild a domestic car industry without this international participation. That's possible. That's possible, but the Ford CEO says this is going to just be a real problem. Mr. Trump says his protectionist trade policies will bring factory jobs back to the United States and fix trade imbalances. By the way, if you remove energy, think of the U.S.-Canadian trade balance as two separate issues. One being energy, and the other being everything else, manufactured goods and services, etc. When it comes to everything else, which is the bulk of everything, the US has a trade surplus. In other words, they sell more stuff to Canada than Canada sells to the US. So there's this trade surplus. The only reason it shows up as a deficit is because, in addition to that, in this other pool, they buy a bunch of energy, and they buy that super cheap at a discount from world markets, and they buy it exclusively from Canada because that's how they set up their infrastructure, and they buy a lot of it. And Canada gets sucked on for its resources, and Canada is too stupid, I can say that because I'm Canadian, too stupid to create its own infrastructure and add value to its resources and become a wealthy country. Instead, we just all give it away to the US, and good on the US for doing that. I'm not complaining about the US because it's the Canadians that created this problem. But this whole narrative that there's a trade deficit with Canada is just wrong. In fact, there's a trade surplus with Canada once you remove the energy component. And in the long term, of course, the US will probably be energy self-sufficient without Canadian oil. And that is a long-term systemic problem for Canada that we have talked about over and over and over on this show. Vehicles, back to the Globe and Mail article, vehicles are Canada's second most valuable export, worth $51 billion in 2023. About 93% of that is sent to the US. Ford employs 1,800 people, almost 1,900 people in two plants in Windsor, Ontario, making truck engines. Its Oakville assembly plant, Oakville is just outside of Toronto, closed for retooling in 24. The automaker said it would spend $1.8 billion to convert the factory to produce EVs and battery packs. That's not a good sign, Oakville. But changed that plan last year. Ford is now converting that plant to make Super Duty pickup trucks, and that which are also made at plants in Kentucky and Ohio. So that's good. That's a good thing for Oakville and Burlington area. John McKay, president of Auto Forecast Solutions, said possible tariffs on autos and related parties will not immediately jeopardize Canadian auto plants, including Oakville. However, the levies will mean any new investments by car makers will likely go into the U.S. So exactly right. So we talked about this on the show yesterday. Tariffs in the short term. If you're running a medium and small business, tariffs in the short term are going to apply in the country that issued the tariff, right? So if the U.S. is tariffing Canadian goods being imported, it is the American consumer that is paying that tariff. Their prices go up unless they have readily available alternative supply to them. And of course, the long-term hope is that they give up paying the higher prices and there's a manufacturing opportunity in the US. But in the short term, it's not the Canadians in that example to pay the tariff. It is the Americans. Now, if the Canadians reciprocate with their own tariffs, then the other side of that is also true. But if you're running a business, remember, all that's happening is that your prices are going up in the export market. And there are mitigating factors for that. What are the mitigating factors? Well, the mitigating factors are currency. So the Canadian dollar drops in light of a US tariff. And now, yes, your price went up in Canadian dollars because there's a tariff, but the currency went down. And so the goods are actually cheaper for Americans to buy. So you don't know how this is going to work out. What you do know is you're not paying the tariff in the short term, but in the long term, there is a structural change coming and you need to deal with that in your business. By the way, when we're talking about auto and the auto manufacturers investing in the US and not in Canada, did you know that that Canadians buy 1.84 million units, so vehicles, and that's projected for 2025. And the historical has been the same. It's been a little bit lower, but it's also been over 2 million in the past. So about 1.84 million units is projected for sales in 2025 in Canada. And if you were to rank that against American states, it would be number one, pretty much by far, bigger than California, bigger than New York, bigger than everywhere else. It is the number one market, if you think of it as states, in North America. And so what is Ford going to do? What is GM going to do? Are they not going to make anything in Canada and just be pushed out of that market? I don't think so. I don't think that was going to happen. There is some leverage there for Canadians, even in automotive. Let's go to Weed Wednesdays, a new segment. Weed Wednesdays. So what is Weed Wednesdays? Well, here's the vision. Here's sort of the background to this. I was discussing with some of my team, particularly on the cannabis side, where we should create a weekly podcast. I'm not going to give away the name because I like the name a lot. It's not Weed Wednesdays, I can promise you that. A weekly podcast geared towards the cannabis industry. We can bring on guests, we can bring on experts, and the idea is to help medium and small business owners, which is the point of the show and most of the market that we cater to, both in Sinclair range and the brand thescottsinclair.com, links in the notes. And the theme of that show would be, hey, there is a market. There is a market for profitable cannabis companies, notwithstanding all the difficulties that have hit that industry in the last, say, 5 to 7 years. There is capital available. You talk to cannabis owners, business owners, small businesses, medium-sized businesses, and I'll say, hey, there's no capital available for the industry. Well, that is wrong. There's capital available. There's opportunities available. The industry is shaking out, and maybe we are on the verge of being able to be successful in this industry after the initial bubble and the bursting of that bubble. That's the general theme. We're still working it through in the notes to the show. Why don't or make some comments on that? Let me know what you think. And also you can just DM me or anybody from the team and let me know what you think about all that. So what we're going to do is try to cover a couple of stories, and I'm just thought I'd throw it into Mornings with Scott here just to see if there's actual content and whether that makes sense. And also, I like the industry anyways. We're very active in it. So Aurora Cannabis last week, this is not today's story, but a few days ago announced their fiscal Q3 2025, and they knocked it out of the park. Net revenue jumped to $88.2 million for the quarter, a 37% increase from the prior year and a 9% gain over the prior quarter. Sorry, 88.2 million was the reporting. 6.27 $6.27 was their stock this morning, which is for the year up 47.18%. That wasn't in this article that I'm looking at, but I looked that up on the markets today. So they went up 47.18%, largely based on this earnings release, which is fantastic. The company attributed its robust performance primarily to medical cannabis sales in both international and Canadian markets, as well as strong results from its plant propagation business. Medical cannabis net revenue reached $68.1 million, up 51% year over year and 11% quarter over quarter. International markets contributed 60% of the global market net revenue. Here's the lesson for cannabis operators. Medical is really strong. It's really strong, particularly in export, and the margins are great. Why are the margins great? Depends on the jurisdiction, but it could be insurance, it could be purchasing plans, and specifically in medical, you're not competing with the black market. That's the bottom line. In non-medical, now you just got somebody who's using the product recreationally or without prescription anyways, and they have different options. Some of it legal, some of it quasi-legal, a little bit gray, and some of it not legal at all. And you're seeing that in every jurisdiction where cannabis has been legalized. But in the true medical market, you don't so much have that problem. Consumer cannabis declined 9.9 million. So their medical is going up and their consumer is going down, decreased 9.9 million in net revenue, a 15% decrease versus the prior year. Management cited its strategic priority of allocating limited GMP manufactured products to higher margin medical channels rather than the lower margin consumer segment, exactly as I just said. Aurora in particular, I was peripherally in discussions with Aurora. I mean, it feels like a year and a half ago now, where they were looking to get deeper and deeper into medical and less into consumer. They saw this trend coming. The evidence was there even a couple of years ago, and they made that change. And wow, congratulations to Aurora. This is knocking it out of the park. Consolidated adjusted gross margins reached 65%. Beware of medical is also direct to consumers to avoid the provincial wholesale charge from a LinkedIn user. Thank you for that. Medical is I'll just read this for you guys. Medical is also direct to consumer, D2C, so you avoid the provincial wholesale charges. True. That's exactly true. Consolidated adjusted gross margins are reach 65% for Aurora. Now, beware of, if you're an investor in this space, beware of gross margins in this business because they're heavily influenced by the mark-to-market valuation of the inventory, the plant inventory. And really that just wildly swings your gross margin from period to period. I did not do a deep dive into these financials to see what was going on there. Just a heads up. But also Aurora's been cost cutting on their overheads for years they've been doing that. Sorry about that. Operating expenses came in higher compared to the same period last year, largely due to higher freight and logistic costs. Adjusted SG&A expenses reached 31.3 million for the year, increased from 27.8 million a year earlier. So, like I said, beware of gross margins in that business. The bottom line also swung strongly in the positive territory with net income. Listen to that, net income, not net positive EBITDA. Actual net income after everything of 31.2 million versus a net loss of 17.1 million last year. So they are profitable at a decent rate. And certainly as it says here, the changes in the estimated value of the biological assets, that is that mark to market for accounting purposes in the gross margin of the plants themselves. And they can have wild swings and it can really just skew entirely your net income and your margins. And they're saying that has happened here as well. So the biological asset valuations boosted the earnings figure, but also management emphasized that revenue gains and cost reductions also played a role in the net income. Adjusted EBITDA, 23.1 million. 23.1 million, a 128% jump over Q2 2025's. Aurora posted free cash flow of 27.4 million, a dramatic shift of cash outflow of 4.7 million a years ago. So it's not just accounting trickery. They're actually bringing in a bunch of cash. I can't think of anything better for the industry or for this company, and management deserves huge props. And I would suggest to you in the markets that this stock is very much undervalued. I do that without doing a deep dive. I do not give financial advice on this show. Don't listen to me for your trading, but I am going to do a deep dive on this. I think they're knocking it out of the park, and this has been great. So here at the very bottom of the press release and the news story is what I think to be hey, Catherine, thank you for joining us on Instagram. What I think to be the most important part, if you remember the theme of this podcast that we're trying to talk about, not the Mornings with Scott, but the potential cannabis podcast that we would do weekly, not live, pre-recorded, perhaps with guests. It says the company simultaneously filed a preliminary base shelf prospectus for the issuance of up to 250 million in equity and debt, effectively replacing an expiring shelf to ensure a long-term strategic flexibility. So a shelf perspective is if you're going to be able to raise money, then you want this prospectus out there, and you're doing that. Except why would they announce that right now with these numbers, with this release? Well, it seems clear to me the idea here is to strike while the iron is hot. Someone is willing to buy these shares, these new shares being issued via prospectus, to put money into this company. There is a market for real companies that are profitable and have a real business, are not built on the dream, which has been, I'm not knocking the dream of cannabis. I'm just saying it's not a business plan. And eventually, as we have learned, the industry or the smart money just bails away from that. But there is real money available. Let's keep an eye on Aurora. I think they're going to raise money. I think it proves the entire point of what's going on in this industry. Second story, Aphria, now Tilray, has agreed to a $30 million settlement to resolve a shareholder class action lawsuit alleging misrepresentations of 2018 related to the acquisitions of two smaller companies. I was interested in this story because my team, Aphria, is located in Leamington, Ontario. And in the Canadian cannabis space, there was these huge indoor greenhouses that were growing fruits and vegetables mostly. And they were converted back in the heyday, the bubble to cannabis. And Aphria had one greenhouse, and right beside it, my team was helping another company convert their greenhouse, raising a lot of capital, helping with their licensing and structure. And my team went in, some of them went in as board of directors and interim executives, right as a neighbor. So I got to know the Aphria people, who were one of the early Canadian licensed producers. So that was interesting to me. So the lawsuit claimed these misrepresentations on the acquisitions inflated the Aphria share price, again, back in the day, which later dropped significantly when the truth came out. The settlement does not admit liability, and it's paid a little bit by insurance, a little bit by individuals who it would not say who they are, and I could not find that information. And in any way, Tilray, which is the owner of Aphria, had already accrued for this. And so there's going to be no financial impact, but it did remind me. And so I read this story last night, and I went to the artificial intelligence and Perplexity, and I said, hey, that Aphria class action lawsuit that's being settled, is that tied to the allegations of one Andy DeFrancesco and his role of accusation that basically him and his team were front running this? And the artificial intelligence said, yes, that's absolutely what this was. And I thought it was. And so, first of all, just a heads up to everybody, I'm not going to ever speak badly of Andy DeFrancesco. And some of you may be waiting for that. Not my place to do that. I know him personally, not also. It's not like we're chatting every day, but he's always been good to me. And there is a role in capital markets for people that are promoting and helping entrepreneurs raising capital in the public space, which is exactly what he does. And he may be one of the better ones at that job. And so, and I don't know the hard details. So I'm not accusing anybody of anything. And I'm not speaking negatively of Andy, because like I said, my rule in life is if you're good to me, then that's what counts to me. Anyways, reports from Hindenburg Research. You remember them, the short selling research firm in the US, and they just closed shop, I don't know, maybe a month ago, because the pressure was too much, was the press release basically. And you know how I feel if you've listened to this show for a long time about the short sellers. It's the reverse pump and dump, right? They just come out with, conceptually, the idea could be awesome. It could be there's fraud, waste, and abuse in the capital markets, and we find XYZ company and we don't believe their financial reporting, there's accounting fraud, and we did the research and we shorted the stock first and played the downside, and then got this information, and it turned out to be true, and the whole market crashed, and we made a bunch of money on the short, and we created efficiencies in capital markets. That's all good on paper, except who's regulating that research? Like, if you're big enough as a short seller and you have enough people, you can kind of make up stuff or misinterpret stuff, have a big short, you can afford to keep pounding that short, and you're just killing what otherwise could be a good company, because no one's ever proving this stuff in court, because it doesn't matter. It just, like, the company's already dead, and the short seller's like, hey, that was our research. That's what we thought was going on. I think it's a scam, that entire industry, personally. Anyways, Hindenburg shut down, but it was Hindenburg that went after Aphria and created this class action suit to begin with. And it was about acquisitions included Latin American assets that were later criticized for being, just shams. And if I recall the story from back then, the idea was there was an acquisition in Jamaica, and it didn't really have a cannabis license at all, and it was like just a little rental industrial unit, and Aphria bought it for millions of dollars. This is how I feel about the story. I'm not going back to look at the details, so don't fact check me on this, but that's the general idea. And of course, the accusation, what front running is that somebody goes ahead of time, finds that deal, buys it for nothing, cuts, because it's worth nothing, cuts in the CEO of the public company or some of the directors, and says, hey, what we're going to do is I bought it for nothing, right? And then I'm going to sell it for like $10 million or $100 million to the public company with this kind of press release, because that's accretive, because anybody will buy anything in this industry. and you, Mr. CEO, can share in some of this if you push this deal forward. And that's the idea of front running. And it's a real problem. It's a real problem anywhere you see consolidating industries, which is happening in cannabis, where you see stock promotion and bubbles, which you saw in cannabis. You're going to see issues of front running. As an investor, you should be aware of that. As a company executive, a director, you should be aware of that. Who's bringing you these deals? How does that all work? You're seeing that right now in real estate. You're seeing it in the Grant Cardone funds, the exact same allegations and class action suits. I don't know the details of that one either, so I'm not accusing anybody of anything. But if you're raising retail money, which Cardone is, and you're running out and buying the property first and then flipping it into the fund at a profit, and then profiting from managing that as well, but you've already sort of locked in your upside on this deal, that becomes a problem. Disclosure is a big issue on that. All right, I'm getting short on time here. Let's just tackle this third article in the cannabis industry. Bloomberg, U.S., not Canada, says that the cannabis industry faces debt reckoning without bankruptcy help. And the general idea here, in the interest of time, is that the bankruptcy code in the United States is a federal code, same in Canada, federal code, and cannabis is legal in many states, but it is not federally legal, which means that you cannot use restructuring protection like a Chapter 11 in the US with a federal code, because you're doing something illegal from a federal perspective. And companies file Chapter 11 to protect themselves from creditors, to restructure, get themselves back on the foot. There is societal good to bankruptcy, and what it does is it allows companies to survive and to save jobs by limiting the aggressiveness of creditors. But you cannot do that in the cannabis business in the US. Now, why is that? I just told you why. But in fact, this was so easy to see coming down. I think it was years ago, like 5-6 years ago, I spoke about this issue. Nobody was going bankrupt yet, but I spoke about this at a legal banking cannabis conference that I was part of. And this is exactly what was going to be the issue: is the bubble burst and you're not able to restructure in the US because of this. But this article looks at a company called Schwazze, Schwazze. I might not be pronouncing that properly, which I believe is a Colorado-based and New Mexico-based cannabis firm with a bunch of 63 retail dispensaries, 4 manufacturing plants. Retail brands include Starbuds, Emerald Fields, Greenleaf, Standing Akimbo, and Everest. And they have a biosciences division as well. And so what this article says from Bloomberg is that there's $6 billion of industry debt maturing end of this year, next year, and everybody's in trouble. Everybody's losing money, and there's no way to restructure that debt. Well, that's not entirely true. And let me tell you why it's not true. It's not true because there are state remedies available, number one. So you can do ABCs, you can do receiverships and a restructuring within that in the state. They're probably in different states under the Business Corporation Act. You could do some arrangements. That's a big thing in Canada now. Not for good reasons, but that's a big thing in Canada now. You can even do, I've seen tricky corporate structures thought about from day one, where you basically have a Canadian parent company. I think you have to be a parent. It might be a sub though. That really isn't doing a hell of a lot, but but if you structure, and then your operations in the US, and then you could do the structuring in Canada. And then, so you've already restructured the Canadian or sought protection on the Canadian division. And then through reciprocal chapters of the US bankruptcy code, you can get that through. Okay, I'm not current on that, but I have seen that structure before. I do know that it has worked in the past. So you do have options, is my point. And Bloomberg, I think, is wrong on this. If you are a US marijuana company, cannabis company, what you need is early advice from expert people, and not just a bankruptcy attorney. Okay, you need to get broader advice. And how can you do that? Well, there's lots of people you can talk to on the investment banking, corporate finance, legal. accounting side. But an easy way and a cheap way to do that might be to look at our information. You can go to Sinclair Range. You can reach out to me. I have a team of coaches, a team of investors. If you go, there's a link in the notes where you can click on that and go through to thescottsinclair.com, the Shopify site, and you will find coaches on there. And for $350, $350 US dollars, you can get a world expert with cannabis experience and restructuring experience and refinancing experience who can send you in the right direction as often as you want. You don't have that access anywhere else. That is the best value for money for cannabis companies thinking about needing to raise money or restructure or whatever. All right. There we go. Too long into this. Sorry about being 5 minutes over time. Anything else I wanted to say? No, that was it. Anything in the notes? Everybody on Instagram, thank you for listening. Sorry about my voice today and my cough, but hopefully we'll be better by tomorrow. This has been Mornings with Scott. I hope you enjoyed Weed Wednesdays. Give me some comments on that. Should we continue? And I will see you tomorrow, 8:30 a.m. Mountain.